It's installed in a lot of systems. I know of hedge funds that are actually using AI to pick stocks. And it's not just, doing some basic research or looking at footnotes and financial statements. It's actually selecting the stocks and executing the trades. I mean, there are humans who keep an eye on it, but the AI is doing the trading. It's also ubiquitous for registered investment advisors, making portfolio recommendations to clients. Traders are using AI, again, to come up with ideas to interact with the markets. So it's here. A lot of good will come from it. And I mentioned specifically applications in, biomedicine and coming up with drugs for treatments, et cetera. I mentioned it because it's important and it's happening, but that's not mainly what the book's about. What I do, I take AI, and I know a lot about it. I built deep learning models. I built them for the CIA. I built them privately, et cetera. So I know how they work with the nodes and the edges and the layers and, the machine learning. And so you take a billion inputs, put them into what are called nodes. They're mathematically processed. They produce outputs. The outputs then become the inputs to the next layer and the next layer, et cetera, until finally you narrow it down to some kind of recommendation. So I have a very good working knowledge of how it works. And then with GPT is just a branch of AI. It's the one that's getting a lot of the buzz lately because it can write and produce, college kids are using it to do term papers. It's maybe cheating, but they are. I mean, it's just a reality. They can talk to you. They can produce images, etc. So that's the kind of interactive front end with images and voice recognition. But it's really just a branch of AI. But I look at all this, and I make the point that, there's a lot of good that will come out of it. It's here whether we like it or not, but there's some hidden dangers. And one of the ones I point to in the stock market, there are a couple. One is we tend to anthropomorphize things like AI. Now that just means we give human characteristics to things that are not human. So Alexa may have a nice voice and you say, Alexa, turn down the lights, and it does, but it's not human. It's a machine. It's all math. I mean, when you deconstruct it, it's all math. It's not your friend, but we tend to treat them as friends. We give them human attributes. That means we trust them in ways that they probably shouldn't be trusted unless you know all of the flaws in them. That's really what I'm doing, is highlighting some of the flaws. So that anthropomorphization, treating them like friends when it's really just math, is a human fallacy, but it's a mistake. The second one I point to is called the fallacy of composition. Now, what is that? That's basically what it means, is that a strategy that may be very good and very smart for a single individual can be catastrophic if done at large scale. So the simple example, you're at a football game and you don't have a very good view because the person in front of you is too tall or they're wearing a hat, and you stand up to get a better view. Well, that works. The minute you stand up, you have a great view of the field. That works for you. But what happens next? Well, the person behind you stands up, the person behind her stands up, etc. Before long, the entire stadium are on their feet. Nobody has a better view because relatively you're back where you started, and everybody's worse off because you're all standing up. So there's an example of it works for the individual but fails at large scale. Now take that over to the stock market. What happens when we have a market meltdown? And they happen. March 2020, the stock market fell 30% in 30 days. It wasn't the biggest crash in history, but it was the fastest crash of that magnitude in history. And what do people do in that situation? Well, for a few days, they watch it. Oh, I'm right. The market's wrong. It'll come back, etc. But then they kind of hit the panic button. They sell everything, get cash, move to the sidelines, wait out the crash. And then when it's over, tiptoe back into the market and start to buy some of those stocks at better levels. Well, that is a really good individual strategy. It's not a bad strategy at all. But what happens when everybody does it? The answer is you have all sellers, no buyers. Markets go straight down. They blow through the circuit breakers. They go through the floor, and regulators actually have to close markets. It's not a question of a timeout or a circuit breaker. You actually have to close the markets, and who knows if it can reopen. So what I do in chapter 1, I create a scenario. It's a nonfiction book, but scenarios are a good way to illustrate this for the reader, where you've got a couple different actors. One is a billionaire family office in New York. Another one is two hedge fund operators, but they're actually criminal masterminds trying to manipulate the market in Mallorca. There's a cyber warfare unit in China, and they're all interacting in ways. And then I have a Federal Reserve chairman who's the last to know, but that's typical of the Fed. They're usually the last to know. But through a combination of deep fakes, videos of the Fed chairman saying things which he never actually said. But then he's on a plane and they can't reach him to deny the remarks. So the market believes the deep fake. It starts going down. The criminals in Mallorca, then they put in all the sell orders. But the Chinese are putting in sell orders at the same time, having waited for the market crash. They're not trying to make money. They're trying to destroy the Western economy. And then markets follow this scenario I described. There's a lot else in there, and it's all having lived through quite a few market crashes in my time. I was able to, I think, add some color to make it interesting. But here's the point. There was no mastermind. The criminals in Spain didn't know about the family office in New York. The family office in New York didn't know about the cyber warriors in China. The Fed didn't know any of these things. Neither did the stock exchange. It happened. It's really a case study in complex dynamics where properties emerge from a complex situation, but nobody's really in charge and nobody really expects it. Now, some of that is human nature. I could point to financial panics going back to the 14th century. But what's new is that when you put AI on top of it, take human nature, fear and panic, and all the things we all experience from time to time, combine it with AI in such a way that there's no one to apply the brakes, no one to take the other side of the trade, etc. This will happen faster and in a more dangerous way than people realize. Right now we have circuit breakers. Circuit breakers, first of all, the market has to be down a lot, over 10%. Then they just close the market for 15 minutes. It was designed to give people time to talk to each other, but in the world of AI, nobody's talking to each other. Everyone's relying on the robots, and that's part of the point. But could you have a system? This is something called cybernetics. Cybernetics is it's an ancient Greek word, but the original meaning is the helmsman. Who's steering the boat? In other words, who's in charge? And cybernetics has applied to this situation. We say, okay, instead of a circuit breaker where we just close the market at a point, why don't we throttle the order flow a little bit? So the market's down, 5%, which is not that extreme. I want to sell 1,000 shares. And the system says, no, we're only going to execute 500. The other 500 will stay in the queue. You haven't lost any money, but, and then if it's down another 5% and I sell 1,000 shares, say, well, no, we're only going to execute 100 at this point. And do that to everybody, just as a way to tap the brakes instead of slamming the brakes. There are other suggestions, but that's one fairly straightforward way of dealing with the extreme outcomes that you can get with AI. But I look at all this, and I make the point that, there's a lot of good that will come out of it. It's here whether we like it or not.